Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we really get into today's analysis, we want to remind you to check out the special 14-day trial link down in the description for StockOracle.
Right, yeah, StockOracle. Just to be clear, we use it as an AI-aided stock research platform.
Yeah.
It is definitely not financial advice, and it's not, a trading signal service or a provider of real-time market data.
Exactly. And we also need to mention that the link below is an affiliate link, which means the channel may earn a commission at no extra cost to you.
Yeah, and please remember that, like with any tool, StockOracle's AI insights and their valuation estimates, they can be incomplete or just straight up wrong. So always make sure you verify the important facts yourself before making any moves.
Absolutely. So with that out of the way, we really need to talk about the massive energy crisis happening right now. I mean, the artificial intelligence revolution is incredible, but it's hitting a physical brick wall.
It really is. I mean, we spend so much time talking about the software side, right? The models, the parameters, the crazy photorealistic video generation. But the physical reality of actually training and running those massive AI data centers is, well, it's staggering.
Yeah, the power demands are just off the charts. The major tech companies are building these colossal data centers, and there literally isn't enough raw baseload electrical power on the grid to sustain them.
Which brings us to the mission for you today. We are looking at this wild, highly futuristic, and honestly pretty contested solution to that exact bottleneck. We're talking about advanced nuclear fission.
Specifically, we're looking at Oklo, trading under the ticker OKLO. They are sitting right at the center of this massive infrastructure pivot that we're seeing in wealth building today.
Right, because for, what, a decade now? The tech industry has been totally obsessed with wind and solar.
Oh, absolutely. But data centers, they don't care if the wind is blowing, They don't care if the sun is out. They require massive, continuous 24/7 power.
Yeah, baseload power.
Yeah.
And advanced nuclear is rapidly becoming like the only viable math equation to solve that, which is why the wealth building context here is so fascinating. It's like, investing in the Wright brothers before the plane actually takes off.
That's a great way to look at it, because when we look at the fundamentals, it's a glaring contradiction. Oklo is positioned to solve literally the most critical infrastructure bottleneck on the planet, with companies like Microsoft and NVIDIA desperately circling them.
Right.
But their stock is currently sitting at its absolute floor. We have these immense macro tailwinds colliding with some pretty severe near-term financial realities.
Let's dig into those numbers, because on paper, this looks insane. Right now, Oklo is a company with zero revenue, no trailing 12-month revenue, no gross margins, and an EPS of negative 0.8325.
Basically, they are heavily investing in R&D and regulatory approvals. They are just burning cash.
Burning it. So if they're literally making $0 right now, how on earth is the market assigning them a market cap of $6.88 billion?
I know, it sounds crazy, but the valuation and their price-to-book ratio is sitting around 2.6 right now. It isn't about what's currently on their balance sheet.
Okay, so what is it about?
The market is pricing in their future cash flow potential, and specifically, their first-mover advantage. They have incredibly robust institutional and government backing. The market is looking at Oklo's inclusion in federal programs right alongside hyperscalers like Microsoft, and they're basically pricing in the sheer inevitability of the demand.
So they're positioning themselves as, like, the bridge.
Exactly.
Yeah.
They are the gas-to-nuclear bridge for AI data centers. Tech giants have these super strict zero-emission mandates, right? But right now, to keep up with the compute demand, they're quietly relying on natural gas peaker plants just to keep the servers from crashing.
So Oklo is basically offering the 24/7 reliability of a gas plant, but with the zero-emission profile of a nuclear facility.
Spot on. But to understand why this is a catalyst, we have to look at the mechanics. They aren't building those massive cathedral-sized nuclear plants from the 1970s that, take 20 years and $20 billion to build.
Right, because those are light water reactors. And Oklo is doing something called fast fission, Wait, so how does fast fission fundamentally change the timeline and the economics here?
It's a complete departure from legacy nuclear. So traditional light water reactors use water to slow down or moderate the neutrons to sustain a chain reaction.
Okay.
But water boils, obviously. So to keep it liquid at those high temperatures, you have to keep it under immense pressure. That requires massive, incredibly expensive, heavily reinforced steel and concrete containment domes.
Which is why it takes a decade of pouring specialized concrete just to get a traditional plant off the ground.
Exactly. Fast fission reactors flip that entire model on its head. They don't slow the neutrons down. They use fast neutrons, so they don't need water for moderation. Instead, Oklo uses liquid metal cooling.
Wow, liquid metal.
Yeah, and because liquid metal boils at a much higher temperature, the reactor can just operate at normal atmospheric pressure.
Oh, I see. So you remove the immense pressure,
Yeah.
and you totally remove the need for a hypermassive containment dome.
Exactly. You drastically shrink the footprint. The reactor becomes smaller, much more efficient, and way cheaper to manufacture at scale. It turns nuclear power from a bespoke, localized mega project into like a factory-manufactured deployable product.
Which sounds incredible in a vacuum. But I mean, having a revolutionary reactor design on paper doesn't matter at all if the government won't let you turn it on.
That is the ultimate hurdle.
Which brings us to the catalysts, right? The actual moat of this company.
Yeah.
Because they just crossed a massive regulatory milestone. The U.S. Department of Energy, the DOE, just granted startup authorization for Oklo's Grove's isotope test reactor.
And the timeline on this is the real story here. They achieved this authorization in just over 10 months from groundbreaking.
10 months. In the nuclear sector, 10 months is usually barely enough time to, establish the Committee for Environmental Review.
Right. Navigating the standard Nuclear Regulatory Commission, the NRC, for a commercial license is notoriously brutal. Their standard pathways are totally rigid, designed for those massive legacy pressurized water reactors. They really struggle to evaluate smaller, advanced designs quickly.
It's kind of like trying to get approval for a radically new commercial airliner, but the regulators require you to build the entire plane and crash it a dozen times before they even look at your blueprints.
That's a perfect analogy. But Oklo found a massive regulatory loophole. By partnering with the DOE to build a test reactor on federal land, specifically at the Idaho National Laboratory, they fundamentally bypassed the standard NRC commercial logjam.
Oh, wow. So they just utilized the DOE's specific oversight authority for test reactors to get a physical prototype operational.
Exactly. They found a fast lane to prove the physics. And this authorization paves the way for what the industry calls first criticality.
Wait, does first criticality mean they actually start making money, or is this just a really expensive science fair project?
It's the ultimate de-risking event. First criticality means achieving a sustained, controlled nuclear chain reaction. It's the moment the math on a whiteboard becomes actual physical heat.
Right, because a hyperscaler like Microsoft isn't going to sign off on integrating a power source into a multi-billion-dollar data center based on a computer simulation.
Exactly. First criticality transitions Oklo from a conceptual design firm to an actual operational nuclear entity. It creates a huge moat against competitors like X-Energy who are racing toward the exact same goal. Oklo just secured a very tangible first-mover advantage.
Okay, so if the physics hold up, and the regulatory pathway is clearing, and these huge tech giants are waiting with open checkbooks, shouldn't the technicals look great? The stock chart should logically reflect that momentum.
You would think so.
But the reality is a pretty brutal disconnect. Oklo is flashing bright red right now. We're looking at a current price of $39.58, and it dropped over 5% just today. It is hovering dangerously close to its 52-week low of $39.53.
Yeah, the drawdown has been severe. We're talking about a 45% drop over the last 13 weeks and a 53% drop over the last 26 weeks. For context, this stock was trading at a 52-week high of $193.84 back in October.
A drop from 194 down to 39 is definitely enough to shake anyone's conviction. But analyzing the technical volume profile right now paints a very specific picture, doesn't it?
It really does. The stock is exhibiting deep oversold conditions right at historical support. The volume regime confirms that exhaustion. Current trading volume is sitting at 0.72 times the 3-month average.
So selling pressure is just drying up.
Exactly. The panic sellers have already exited the position, and there are no flagged squeeze symptoms in the data. The price action we're seeing down here, around $39, is being driven by natural supply and demand discovery. It's not artificial mechanical shorting, it's finding a natural floor.
And didn't we see a bounce recently?
Yeah, we saw a 3% pre-market gap up on July 27th, right off this zone, which technical analysts are definitely monitoring as a potential double bottom bounce.
And institutional sentiment hasn't completely inverted either,
Yeah.
right? I mean, Barclays is still maintaining an overweight rating.
They are. They did lower their price target from $82 to $76, which might grab a bearish headline.
But I mean, when the underlying asset is trading at 39, a $76 target still represents nearly 100% upside.
Exactly. It signals a capitulation to near-term price compression, but they clearly have a sustained belief in the structural long-term thesis of the company.
Well, I want to challenge that optimism with a glaring data point from the insider flow. Because over the last 90 days, insiders have sold a net 1.29 million shares.
Yeah, that's a big number.
It is. If the tech is so revolutionary, why are the insiders cashing out right before the finish line? The immediate instinct is to view that as a massive red flag.
Insider selling at a development stage company always warrants intense scrutiny. It's a classic bearish signal. But if we contextualize it within the life cycle of the stock, it starts to look less like an exodus and more like, well, standard wealth management.
Right, because this stock ran up to nearly $194 less than a year ago.
Exactly. Many of these executives have their entire net worth tied up in equity. It is entirely standard corporate behavior to lock in profits after a parabolic run like that, rather than it signaling some internal failure of the reactor technology.
That makes sense.
And the timeline supports that interpretation. The heavy insider selling didn't derail their operational execution. They still secured the DOE startup authorization. And the data suggests institutional interest is stepping in to absorb those shares anyway.
Which brings us to the actual existential risks here, the bear case. Because the biggest risk isn't necessarily that the physics will fail, it's the sheer crushing weight of the capital required to prove they work.
Absolutely. Building nuclear infrastructure is arguably one of the most capital-intensive endeavors on Earth. Specialized engineering, materials, regulatory compliance. The cash burn rate is immense.
And since they are a pre-revenue company, if their cash reserves dry up, they are forced to return to the capital markets. Isn't that dilution risk a potential death spiral?
It can be.
Because if the stock price stays depressed down here at 39, raising capital requires issuing significantly more shares, which just ruthlessly dilutes the existing equity holders and hurts the stock even more. How do they escape that?
Well, Oklo's specific market positioning might offer an escape hatch from that traditional equity dilution death spiral. They aren't operating in a vacuum. The end users of this technology, the hyperscalers, have trillions of dollars in market cap, and they are entirely reliant on securing future power sources.
So they have options.
That level of desperation opens up financing avenues that simply do not exist for standard startup. We are looking at the potential for non-dilutive funding structures.
Like what, specifically?
There is heavy speculative chatter right now around Oklo securing formalized multi-gigawatt power purchase agreements, or PPAs, directly with companies like Microsoft or NVIDIA.
Okay, so if Oklo can lock in a binding PPA like a contract, guaranteeing a massive hyperscaler will buy all the power a reactor produces at a set price for the next 2 decades, the entire financing model shifts, right?
Completely, because then you don't need to issue equity at $39 a share. You take that multi-gigawatt contract straight to an underwriter, and you secure highly favorable project debt finance. The contract itself becomes the collateral.
Wow. So securing a binding PPA would instantly validate their commercial model. It transitions their future cash flow from, like, a theoretical projection into a contractual obligation backed by the biggest balance sheets in the world.
Exactly. Which brings us to the catalyst calendar. What is actually going to move this stock over the next 3 months?
Well, all eyes are pointing toward August, when Oklo is expected to release their Q2 2026 earnings report.
And since they are pre-revenue, nobody is looking for a surprise jump in quarterly sales. The focus is entirely on capital management and the engineering timeline. The market is going to be ruthlessly focused on 2 metrics in that August report.
Right. First being the capital expenditure guidance.
Yes, investors need to see the exact cash burn rate to model out the runway and assess the immediate threat of that dilution risk we just talked about.
And second, they need a date. The market is going to demand an exact update on the timeline for achieving first criticality at the Groves reactor in Idaho.
First criticality is the paramount binary catalyst here. The continuous push by federal governments to streamline nuclear development provides a great macro tailwind, but company-specific operational news regarding the physics of that reactor is what will actually move the needle on the valuation.
Okay, so weighing all of this, the undeniable AI energy crisis, the massive advantage of the DOE authorization sidestepping the NRC logjam, pitted against a crushing 53% drawdown, and the looming specter of capital dilution. Where does this leave us for a final verdict?
Synthesizing the technical setup, the regulatory moat, and the risk profile, Oklo earns a bullish score of 6 out of 10.
A 6 out of 10 implies cautious optimism.
Right. And to be totally clear, we are not telling you to buy, sell, or hold this stock. We're just laying out the analysis. But a 6 out of 10 recognizes the asymmetric nature of the setup. It is purely an event-driven swing trade at this juncture.
So you aren't buying a balance sheet?
No, you are trading the momentum around the impending operational startup of the Groves reactor and the upcoming August earnings cycle. It offers a highly compelling entry point sitting directly on its 52-week floor.
Right, and if they successfully thread the needle on financing, maybe utilizing PPA-backed debt to avoid severe equity dilution, that $76 price target from Barclays illustrates the explosive upside potential currently trapped in this depressed valuation.
But as we've said, the downside is severe if they run out of cash and have to dilute heavily at these levels. It requires an iron stomach. You are effectively betting on the final test flight of a radically new machine.
Exactly. The cash is burning, the market is skeptical, but the government just cleared the runway. Now we just have to see if the physics hold up when the reaction actually starts.
It's going to be a fascinating few months.
It really is.
Yeah.
Now, before we wrap up, I want to leave you with a larger macro dynamic to mull over, because the underlying theme of everything we've explored today is desperation.
Total desperation for power.
Yeah. AI models are scaling so fast that they are projected to consume more power than entire sovereign nations in the coming years. And the traditional grid has fundamentally failed to anticipate or handle this demand, which raises a massive question for you to think about.
What's that?
As regulatory hurdles and grid limitations continue to bottleneck infrastructure, will tech giants eventually be forced to stop acting like software companies?
Oh, that's an interesting thing.
Right. Will the sheer necessity of keeping the servers online force trillion-dollar entities like Microsoft, Google, or Nvidia to transform into industrial utility financiers? Maybe even outright acquiring startups like Oklo and taking them private, just to vertically integrate their own power supply. Because in the age of artificial intelligence, the company that controls the baseload power controls the future.
That is a wild thought to end on, but it makes perfect sense for the long-term view of this entire sector.
Absolutely. Well, that's all for today. If you enjoy the analysis and our 6 out of 10 bullish score on Oklo, don't forget to subscribe, like, and leave a comment below.
And remember to click that 14-day free trial link in the description to check out StockOracle and run your own AI-assisted research on Oklo's next big moves.
Thanks for listening, and we'll see you on the next one.